A bottom line, because there were a lot of expectations about this financial deregulation review. Does it measure up?
Well, I'm seeing some of the research that's out from the street today, and people are pretty enthusiastic about it. Obviously, one of the things they all caution is, pay most attention to the things that the regulators can do without Congress, because that's always a, question mark. But there are quite a few things in here which would lighten the regulatory load, both for the small banks, which we know, even Dan Tarullo, when he was at the Fed, was trying to do already, but also for the bigger banks, things like reducing the rules on leverage lending, which, is used to make leverage buyouts. That is one of the proposals. The Volcker rule, easing the way it's enforced, and also some things that haven't even gone into effect, like the limits on hedge funds and private equity ownership by banks, doing away with some of those things. That would require some help from Congress. Bank of America actually put out a report today saying that some of the changes around how capital could be measured would allow, and those could be done by regulators, would allow banks to free up $2 trillion on their balance sheets, which obviously could go to lending, it could go to buybacks, it could go to dividends.
So they could loan more money because they wouldn't have to keep the reserves the same way they have been keeping them. But as a practical matter, is there demand for the loan? We were just talking with Mike about this. Is there demand for the loan even if they can make them?
Well, I think it's interesting. I mean, we've been writing quite a lot on Bloomberg. Last week we had the Bloomberg Invest Conference. There's quite a lot of nervousness about risks in the financial system already. People are talking about the subprime auto sector. People are talking about consumer debt having increasing risks. Credit card default rates are going up at some of the companies. So it's sort of interesting to see this desire for, freeing up the banks at a time when, we have Bill Gross today. I mean, this is not new for him, but saying, he sees incredible financial, risk in all the financial markets. So on the one hand, some of these things are called for, the easing the burden on lower banks, raising that limit of $50 billion for something to really need the more regulation. But some of these things, like making leverage loans easier, freeing up the Volcker rule, would allow banks to take more risk in the financial markets, and the question is whether there's already a lot of risk building up right now.
So, Mike,